Hi everyone. So far, I have made lots of videos about the cost estimating and quantity take-up using Qubit software. However, quantity surveying is not only about the quantification and valuation based on the first principle, but it also involves the cost planning, which is process of providing consultant for the client from beginning of a project up to tender state. However, to do cost planning is easier said than done because it requires the cost planners have an overarching understanding of the project from the design, economic parameters, and more importantly, the risk assessment. So, in this series of video about the cost planning, I will discuss first about the price index in cost planning, and second, the uh, cost planning summaries, and third video is about the risk assessment. So in this video, I will discuss first the price index in cost planning and rising first. So as for some application of price index, if we refer to this table, we see a brief cost estimate for residential complex. A brief cost estimate is an initial budget for a project when the client initiate they give a business idea about developing a project. So a consultant firm may be engaged by the client to provide the brief cost estimates, but in case the client hadn't engaged with a consultant firm, they may instruct their in-house quantity surveyors, I mean the maybe the contract commercial department to come up with a brief cost estimates. And in here, if you refer to the detail, usually they will have only very basic information. For example, building A with 25 floors and the unit number of apartments is 90 units, and they will based on functional unit rate. One unit is around $460 per unit, come up with the cost of around 36 million. We do the same for other items, and the RAP total building cost is around $140 million. But or made based on historical data of the client is has to be amended for inflation. Uh, so in order to do that, we have to use the building cost index. In here, the building cost is about 362, and we need to adjust this for days. In here, I give an example October 2023, and the building index is 373, and it increased about 3%. We will times 3% total building cost. So the adjusted value of this brief cost estimate should be around 4 million. That means we will add this increase value to the original total building cost. And another area we may have to know about the price index is the adjustment for change in cost. In here you can see a condition of finished contract that stipulates that the contract may be subject to price adjustment, which will be calculated based on the price index. So that's all two basis application of price index in cost planning and contracts. So what is the price index? Which simply is the total price of a basket of goods and services at a current year divided by the price of that goods and services at the base year. In order to get the basic understanding of this, we should jump into a simple calculation price index here. In here we have item with three goods and services. The first one cement, second aggregate and sand, and quantity and price in 2015, which is the base year. We call it base year because we will compare the current year with the base year. So the price in 2022 the respectively here, and we will calculate total price or expenditure for these goods services in the base year 2015. We will use quantity for cement. We use quantity 1/4 times price in 2015, and we come up with the total expenditure for the cement 148. Repeat the same process. We will have the total price for aggregate and sand and total market basket for 2015 in 548. Do the same for the expenditure for current year 2022. We will have the total price 745, and the price index for the current year 2022. We will use our market basket price the current year divide the market basket price for base year 2015 times 100%. And the market basket 2022 we already calculated here 745, and the market basket of pay year is 548. We put it here, divide 545 by 548 times 100. We will have the price index for the current year 2022 is 136, and for the price index for base year it will always be 100 because it divided itself. So you can see here the market basket 2015 548 divide itself with 548 times 100 is 100. Then when we have the price index, we can calculate the inflation by using this formula. Inflation is equal to price index in current year minus price index in base year divide price index in base year times 100. For example, the inflation from 2015 to 2022 is equal 136 is our price index in current year minus 100 is our base year, and divide our price index for base year 100 is equal to 36%. That's how we calculate price index in a very simple way. Of course, in reality, is maybe more complicated, but we just have learning the very basic fundamental one. So in this example, we will use our price index to do the estimating for the rise and fall of cost planning. In here, we have the indices for the period from January 2022 to January 2023 with 1 year, and the building cost index. We can refer to some review table published, maybe IIQS or any review table consultants which we consider is appropriate. So the building cost is 345 and 373. We also have data for the project. The construction will be commenced within 6 months, and the total construction period is 18 months, and the estimated construction value is 20 million. How to do the calculation of price and force? First, we need to calculate the inflation first. So the percent change over 1 year is 8%. How to calculate that? We will use our index 373 minus the base year 345 and minus price index, building cost index for the base year 345, which is equal to 8%. 8%. You see 8% here. So we will do the portion for the pre-construction segment. We will use this formula 8% here, 8% times 6 months segment here, divide by 12 months, because our inflation is 12 months or 1 year. Do the same for the construction period, 18 months, divide 12 months and 8%. See, very simple. See the general formula. So when we have the portion of inflation for pre-construction 4% and a portion construction period 12%, we will apply these inflation index to our total value here. So for reconstruction periods, we will times 20 million by 4%, and the construction periods 18 months, we do the same, 20 million times 12% is come to 2.4 million around, and total rise in force is sum of the two values, which is around 3.2 million. So another application of price index is for price judgment of VO variation orders. Let's say the subcontract agreements that allow the price adjustment for some items of road work, which stipulates that the new rate will be based on the price index of the current and base months. In here, the base month April, for example, 2008, very long time, and the current index that we want to apply the adjustment in May 2008. In here, 2016 and 2026, and the formula used for the new rate is equal original rate plus original rate times index of May minus base index divide base index, and is the calculation of the adjustment increments is 4.5 if we refer to this calculation. I will demonstrate in Excel later on. In here here we can see the asphalt original rate is 750,000 and new rate is 784 because we use this one times this one, and the estimated new amount is therefore expected to increase follow the original the quantities of asphalt new rate and adjusted rate. We multiply quantity by the new rate and minus the original subcontract amount, the original rate, the original amount. We minus the new value to the original value. We come up with the variation value because of price adjustment for this first item. I will demonstrate how to do this in this Excel right now. In here, I already collect the base index and the currency index. And what I have to do is to calculate total percentage increments by using this formula index current made minus the base index divide base index. I can use the simple function in Excel, but I want to draw up this simple case to review how to create a new formula in Excel. To do that, we will first click to developer and click Visual Basic, and then click insert and model, and then click to insert again, click procedure, and type in the name is price adjustment of pricing index, and at type we change from sub to function, click OK, and then now we will work out our price index formula. Price index equal current index minus base index. I put bracket here, time and divide base index, and at this line I will have to input the argument for this function, for this new function. Here the current index as double means the a number, and comma base index as double again. Remember, if we put the capital letter here in this argument, we have to put capital as well. So we already created the new function for price index. We please make it disappear, and then here we put our cursor over here and typing equal and click and typing price index. Here price index we already made here. We will click here, and then it's appear as this area, the fx. We click to fx in function, and we will input the current index, the argument. I click to the round up icon here and change and choose the current index here and hit enter. For the base index, do the same and choose the base index and hit enter again, and now we click OK. So it pop up the total percentage increment 4.5%, and it will use it 4.5% times the original rate. If I click here, you can see here the new rate use this formula. Okay, so we already have the new rate and variation new rate, and then we will time with the original quantity. We have the total amount based on the new rate minus the original amount of the original rates. We have the total variation due to the rise and falls. So in this video, we have discussed the definition of price index and some of its applications. We have made some example demonstration for calculation of rise and falls in cost planning and the valuation of the rise and falls for a subcontract agreement. I really believe it's very useful for us when we come to the video for the cost summary, the cost planning, the common language of the professional construction, which I will be making very soon. Thank you for watching and see you on the next video.